Good afternoon. Today we are fortunate to have Vijay Mahajan with us to discuss about his journey in the development finance in India and abroad. Of course, Vijay doesn't fit into any one or two single descriptions because I can say that the way he has built the institutions and way he has brought out new concepts, those all leave us groping for any definition of Vijay Mahajan as a personality. So, Vijay ji, we are glad that you are sharing this time to discuss your journey and your views with us. First, to start off with, I would like to share that Vijay was the first to bring professionals into development finance through Pradhan, and later the basics and the basics group of organizations shows how great an institutional builder he is. And incidentally, Vijay is one of the co-founders of Sa-Dhan and also MFIN, and his advice and his inputs are always sought for in the financial inclusion space in India by the government, by the central bank, NABARD and all, and even abroad, including institutions like CGAP and all. So I take this opportunity to warmly welcome Vijay to this evening. First, I would like to start off with how exactly you would like to describe your journey of the 3 or 4 decades with the broader developmental finance, including microfinance.
Well, 4 decades is about right because formally I start counting my work in livelihood promotion from the time I went to Javaja in the summer of 1980 between my first and second years at IIM. Javaja was a rural development project started by IIM Ahmedabad. I worked there as a summer trainee in the summer of 1980. So it is exactly 4 decades. Yeah. Uh, well, I have a lot to look back on, and I'm on the whole think it was a good way to spend one's life. There are many things that one could have done, at with much more depth or scale, more impact, and there are many things that one did which have become very substantive. So at the end of it, I feel it was a good way to spend one's life, and uh, the I was lucky that fairly early. I mean, in the 70s itself, when I used to go and visit several NGOs and others, I had kind of made up my mind that while things like health and education and empowerment are very important, but they, according to me, depend on an anchor called livelihoods. So if a person or a household has adequate livelihood, then they can take care of educating the next generation. They can take care of their health and nutrition, the basic needs, and they will also get empowered. So fairly early on, I had got convinced that I should work to promote livelihoods, and I stayed with that agenda. Even though I'm sort of known for being one of the pioneers in microfinance, but I came to microfinance only because it was, according to me, access to credit was a necessary, though not a sufficient condition for promoting livelihoods. So I thought, let me at least take care of the necessary condition before we get to the sufficient condition. So on the whole, Satish, thank you for giving me a chance saying that, yes, I think I'm on the whole very satisfied. There's a lot to be more to be done, and there's still a lot of poverty and inequity in our country and in the world. But there's only so much that one can do in one's as an individual.
Vijay, there is always has been a lot of debate on credit for the ultra poor, the poorest of the poor. There is a big school of thought says that they require actually wage employment like Narega and all, and a credit institution, even subsidized credit, should not venture with the poorest of the poor. But still, we find that there is a lot of demand for credit even from the ultra poor. How exactly we can manage these two contradictions?
Uh, uh, the I think this is a well-known conclusion. Even in the early days of microfinance, uh, it was known that microcredit works for those who are the entrepreneurial poor. For the completely destitute or disadvantaged, it is a problem because they can't use credit in any economically viable way. But if we go from credit to a portfolio of services which includes some financial services, including, for example, health insurance, life insurance, the ability to make very small savings and create that into a lump sum amount. Uh, uh, you know, uh, these are all important. The ability to have a bank account and receive government payments or remittances from family members. These are all very important ways by which even the very poor can be helped through the financial sector. And of course, there are other things that they would need. For example, if somebody is desperately hungry, first and foremost, they need food security. So, so I'm not talking of a situation of urgency or desperation, but where there is chronic poverty. Uh, Credit may not be the first financial service, but it is uh, sooner or later will be needed when they become, they reach the level when they dig themselves out of the pit and they reach the ground level. Then to grow from there. So the BRAC program, what is known as the graduation program for the poorest, is designed around those principles, and I think it works very well. And in fact, in India, it's being tried in a big way by Bandhan and now by the Bihar Rural Livelihood Promotion Society, and I think it's making a difference. Although it doesn't begin with credit, as you said.
Uh, Vijay, I think the basics livelihood triad is well known for all the institutions, but very few have picked up that. Uh, what do you think is the reason for institutions not venturing into that?
Well, to begin with, while it represented basics as highest strategic aspiration, but I don't think we ourselves managed to make it a, a resounding success. There were pockets where our triad was working. So, triad is basically a combination of financial services, livelihood promotion services like agriculture, livestock, and non farm enterprise services, and then institutional development, that is organizing the poor into self-help groups or cooperatives or farmer producer organizations. So in some pockets we were able to do it, but at even in basics there were different parts of basics which were doing each of the three triangles, but integration was rarely achieved. So, and then of course we got hit by the Andhra MFI crisis. So even the financial services thing became difficult. So so I think the idea itself is sound, and by 2008 we had built revenue models for all the three vertices, and we had about 500,000 clients, fee-paying clients for all the three services. financial, promotional, and institutional development. Had we not had the AP crisis, I think maybe we would have been able to prove it at a scale of 3 or 4, 5 million people, and then maybe others would have adopted it. But the idea, I think, is still valid and needs to be tried. Because at the end of it, even if you ask of the most successful micro credit organizations, they all in their private moments they will say yes, we have a high growing portfolio, and we have large number of borrowers, and we have a high repayment rate. But quite honestly, we don't know whether it is making a difference. You know, and the reason why that comes is because to make a real difference, you also need to bring in those who are not already entrepreneurial, and that requires institutional development and livelihood promotion services. But you can't offer them on a subsidized basis, so you have to develop a revenue model for them. And we didn't quite succeed in scaling it up in basics.
Vijay, that brings to the question that, in microfinance internationally as well as in India, you always talk in terms of triple bottom line, but it always boils down to what Gandhiji said about Western civilization. It's a good idea,
Hmm.
but it doesn't exist.
Hmm.
So, how come we have not really adopted that triple bottom line by a vast section of the MFIs, either in India or abroad?
So you see, it's a bit like, uh, see, these are all aspirational notions, like the Constitution of India. I mean, our preamble itself, justice, liberty, equality, fraternity. If those things were achieved, India would be heaven. It doesn't mean that the Constitution is a flawed document or the people who adopted it were just romantics. I think they were realists and they knew that it may take a long, long time to achieve. Even the American Constitution, despite of what it is, all men are created equal and all of that. Even today, uh, you know, 250 years afterwards, they are still struggling with all types of inequality, racial and economic, and so on. So I think the value of these ideas, the triple bottom line included, is that they are directional. They they tell you which way you should move if you want to progress historically. Uh, the specific progress is always slow because these are imagined states of the world, and the real state of the world to imagined state of the world, there are lots of obstacles. Uh, Still, if you compare to say 30 years ago, the triple bottom line, also popularly known as profits, people, and the planet, there's been a lot more consciousness about social impact, and both at the level of the beneficiaries as well as at the level of operations and strategy. And there has been a lot more consciousness about environmental impact, and as you know, there's now trillions of dollars being invested around what is called ESG, environmental and social and governance guidelines, and even mainstream companies. In fact, in the US, the ESG compliant companies are doing better than the S&P index. So I think slowly it's beginning to be understood that there is no inherent contradiction between these three. It just requires a higher level of ability to manage complexity. I mean, as somebody said, I'm not sure that it was Einstein who said that the sign of a great mind is that it can hold contradictory ideas simultaneously. So these are three mutually contending ideas, and they have to be addressed simultaneously. So the new generation of CEOs and board members and investors, they have to sort of commit themselves to achieving all these three simultaneously. Otherwise, they are just a bunch of dinosaurs. So it's okay. I mean, they'll still run some organization, but their children will not be proud of them.
Vijay, when you look at the efforts which the both the present government and the previous government made for financial inclusion, a lot of effort was there. Digitization, including the financial inclusion program and funds, Rangarajan committee report, then later Jan Dhan Yojana, Mudra, then a lot of Aadhaar enabled payment systems and all. So, with all this, do you feel that at least by next decade, we should be in a very comfortable position as far as the financial inclusion of a vast majority of our people are concerned?
Yeah, except that I think the goalpost will keep changing. See, for our generation, the fact that now there are almost 40 crore bank accounts, and that most of them can be operated using a mobile phone, and they are all located in banks computer systems which are linked to a core banking system. The achievement have been enormous, but the I think the next generation is going to define financial inclusion as not just the ability to open or use a bank account, but to have some basic financial security. Some reasonable levels of savings and reasonable ability to access credit, and the these are all very I mean, the definition will keep changing. So today's inclusion in 2030 will mean different things. And so by that standards, I think the percentage covered of the percentage of the population covered will still be not anywhere close to 100%. So, for example, how
Vijay,
many have health insurance? How many
yeah,
have
yeah,
life
health
insurance
insurance
and
is
stuff
an
like that?
important thing. So, can we, of course, from our side, Sa-Dhan side, we are trying to bring at least a few numbers of MFIs into providing services other than just credit. Many are entering the water and sanitation financing, clean energy financing, then there's a project which are trying to work out in affordable housing and all. Of course, these are small numbers, but going forward, do you think that these are such areas which MFI should take increasing interest?
Yes, absolutely. In fact, I had a conversation with some MFIs recently, and according to me, the first transition they need to make is fixation with working capital credit, which is what 90% of microcredit is. It's not even startup credit, it's really working capital for ongoing enterprises. So we need to go from there to a wider range of financial services. And according to me, the new generation MFI should be not so much an on balance sheet entity, but a composite financial services distribution entity. That is the uh, same platform, whether digital or physical, should enable a person to save, to withdraw, to deposit, to apply for a loan, to apply for health insurance, to buy life insurance, to save for pensions, to remit money, receive money, all of that using a single ID, a single account, a single outlet. And the regulatory framework should be fixed in such a way that on the ground it is done by single outlets, which will bring tremendous amount of sort of economies of scale in transaction, what is called economies of scope. And through that process, the smallness of the transactions will not come in a way, because they'll be small but numerous. The so, and interestingly, you may have read just today that Ant Financials, the Alibaba's spin-off on financial services, which is going to raise the largest IPO ever, larger than Aramco's $50 billion. Uh, it's basically into distribution of financial services. In their case, also investments, small investments. So what I'm saying is that that's the way to go, rather than be focused on credit intermediaries. Whether it is the NBFC model or the small finance bank model or the business correspondent model. If you're primarily a credit intermediary, you're too narrow.
Vijay, one important institution which is now what we can say flavor of the season with the government is the farmers producers organization, and a lot of effort is being made from the government side to support these organizations. And one thing is the credit part. So banks, as you know, are reluctant to deal with at least the new FPOs, but MFIs do not have the wherewithal to really finance them if they want to. So I think they're in a dilemma as far as their credit part is concerned, as far as FPOs are concerned. What could be the ideal solution for this set of institutions? Because they require credit on a regular basis.
Yeah. Sadly, I don't think FPOs, I mean, MFIs are the answer to lend to farmers either through FPOs or directly, because MFIs just haven't learned how to deal with, infrequent repayments. For example, in agriculture, by definition, you have to wait for the crop harvest to get the repayment. And that may be minimum 4 months or 6 months. Sometimes it can be a year if you're for some crops. In case of horticulture crops, it can be multiple years. So I don't think MFIs have learned it. It's not in their genetic code. Uh, uh, so we need a different, instead of you know twisting MFIs to do this, we need a different set of institutions to deal with farmers. And indeed, uh, you know, uh, there are those institutions in place. Recently I heard the NABARD chairman, the new NABARD chairman, Mr. Chintala, say that there are still about 90 out of the 90,000 odd primary agriculture cooperative societies in the country, at least a third, about 30,000, are in good shape. And if they are strengthened and become truly multi-purpose, institutions, that itself would significantly cover all the farmers. That coupled with the Kisan Credit Card program, which is already reaches about 8 crore farmers. So we have the building blocks in place. The problem is that, unfortunately, for 40 years now, uh, in fact, since the 70s, so 50 years, since the first round of bank nationalization, agriculture credit has been seen as something which used to be said about IRDP, inko rupiya dena padega, that you have to give. It's a not just a priority sector obligation, it is also like, otherwise too many questions are asked. And so as a result, it has never been seen as a business line, except for some, few crops which are cash crops or where there's a value chain. So I think as Indian agriculture transforms from, the wheat, rice, MSP dependent agriculture to multifarious agriculture, I think the creativity in extending credit to them will come. But we need a new type of institution. Today's MFIs, I'm sorry to say, are not appropriate for it. If you see some of the most dynamic agri lenders today, like Samunati is not didn't start as an MFI. It started as an agri lender. you know. So
So then Vijay, actually, when you were talking about the past 50 years, because in my early years of career in RBI and NABARD, I used to see the rural bankers well equipped in assessing credit for agriculture, especially the term loans. If I visited a bank branch, the manager or his RDO knew how much the duck well requires, what is the credit, what is the repayment period, if it is some plantation of coconut, what are the credit needs. But now
yeah,
when I go back, I find such technical expertise and information totally absent with the bankers.
yeah.
Probably that
So
has got to do.
that is true. That is absolutely true because if you remember when the banks were nationalized and they were asked to open a large number of rural branches and district credit plans were established, and then in the mid 80s, early 80s, NABARD was formed, and there was a whole. It was a national strategic, really important thing to first achieve food self sufficiency, and agriculture development was a important part of our economic growth strategy. And as a result, the people who were deployed were also top class. All the probationary officers of all the nationalized banks, whether they were SBI or Canara Bank or Syndicate, they all used to start with rural branches. And in the first 2 3 years, they did serious agricultural lending. But that has all you know gone because agriculture is now not even 1/8 of our GDP. This year maybe a little more, but it's about 1/8 of the GDP. So it's lost its importance in the scenario. So आजकल तो MBA का दुनिया है. Digital and MBA.
Vijay, if microfinance institutions, if they have to continue as institutions as such as they are now, what exactly they will have to do additionally or further to survive in future? Because as you all know that unless institutions as well as individuals
Mm.
adapt, everyone will become a dinosaur. So what is there for the microfinance sector?
Yeah, so I think when the numbers actually start coming out in say May or so, in May 21, when all the impacts of the moratorium and restructuring have pretty much got absorbed on the balance sheets and the income statements. I think some will see a lot of erosion of capital, and others will at least get us, sense of that we've got to rethink whether this is the way to do this business, because every 3 years there's something. Either there's an Andhra crisis, or there is a demonetization, or there is a COVID crisis, or in between there's GST, dhakka. So, you can't have a stable business model if 20-30% of your portfolio gets, systematically threatened, every 3-4 years. So one way, as I said, is that MFIs should think of themselves as distribution entities and not be driven by balance sheet lending. And if they are into distribution, then they must get to economies of scope and therefore distribute multiple financial services. And thirdly, of course, they should adopt as much of the digital methods as possible so that the transaction costs of paperwork and face-to-face interaction is minimized. Disbursement and collection can now increasingly be done electronically, so that is also very helpful. So, in a sense, I think we need a generational change. Quite honestly, the just as, with due respect, the nationalized bankers of the 1970s and 80s could have never come up with a microfinance sector. Despite the ones who had a real urge to lend to the poor, but they just couldn't have thought of this method. Similarly, the microfinance entrepreneurs of the, you know, who started between 2000 to, or say from, yeah, 2000 to 2015, 20, I don't think they can really visualize being diversified digital distributors of financial services. You know, it requires a new generation. So, upon to retire ho gaya, I'm suggesting to everybody else also that you retire and give gyan.
Vijayji, you have been one of the founders of Sa-Dhan, and you have seen its early years and now in the recent past also what we have been doing or what we have not been doing. So, what is your advice? What all should Sa-Dhan be doing for the broader financial inclusion sector?
See, I have always, in fact, if you remember a few years ago, I had written a letter to both Sadhan and MFIN saying that do we need two industry associations? And everybody whom I shared the draft with, they said, "Are you mad? You are the one who helped create the second one after creating the first one." So I'm saying yes, but there was a need at that time, and now we need to rethink. And according to me, we need one SRO, and we need one in true industry association, which is or stakeholder association, which is broader than just the service providers. And I think if you look at the possibilities, then between MFIN and Sadhan, they should sit down and decide. One entity playing a role of a confederation of Indian financial inclusion industry, with different segments, lenders, insurers, micro insurers, BCs, all types of people, digital lenders. So it's a CII of the financial inclusion sector. And one which is an SRO, which works closely with not just the RBI, but other regulators, whether it is IRDA or PFRDA or the payments regulator. If there's tomorrow, there's a separate payments regulator. And, helps even SEBI if you get into SIPs. So, who then ensure that there is a good regulatory framework for ensuring that a fair share of these financial services reaches the lower income households. So I think, and sadhans, if you take the natural meaning of sadhan, it means, uh, a resource. But if you remember the sa and the hyphen after dhan, the sa was to remind us that, in Sanskrit, sa is he and sa is she. So it was also meant her wealth. Ela Bhatt and myself, we came up with this name together. So the idea is to ensure that those who are less advantaged, women in particular, continue to get resources, financial resources for their empowerment and for their livelihoods. And in whatever means that can be done. So, I think Sadhan's agenda should be broader than just uh, servicing the needs of microcredit institutions. You know, uh, that was necessary in the first 10 years. So, ho gaya.
No, Vijay, I had seen your letter which you had written to, which you had shared with Sadhan when just before I took over. There also you have discussed this issue. It's an ideal situation, but personally, I was feeling that whether will there be any conflict between the SRO and the association if both are fully separate, or maybe some sort of a link should be there between both of them.
Yeah, so I think there should be a link in the form of, you can't have a common board naturally, but you can have a common consultative council. For example, you take a leaf from the financial sector, uh, you know, RBI, SEBI, IRDA, PFRDA, They are all independent regulators, but there is, an inter-regulator council. Earlier, it was called HLCC, High Level Council, uh, where the entire financial sector as a whole is discussed, not just their own concerns. So I think likewise, the SRO and the industry confederation. That's why I'm calling it confederation, because according to me, it's association of several associations. The confederation and the SRO should have a council which can meet once in, 3-4 times in a year, and discuss issues of common concern. But obviously, you can't have a single governing board or a single entity also. May not be good also, because their operating purposes are quite different.
Feel that this recent FCRA amendment will anyway affect the funds for the broader microfinance sector, especially those who are in the developmental field?
No, I don't think so. I think it's quite honestly, the total amount of FCRA was only about, you know, 20,000 crores or something like that. And more than half of it anyway goes for very specific purposes like orphanages and education and so forth. What comes for things like livelihood promotion is not even 5,000 crores. And today, mid 2-3 mid-sized MFIs can raise that kind of money from the capital markets. So I think our great strength in the microfinance sector is that we managed to tap into the capital markets to bring in, from what I know, last year over 2 lakh crores came into the sector for the disadvantaged. This wouldn't have happened but for the microfinance sector. So we should not worry about FCRA and all that. We should really just focus on ensuring that we meet the broader financial services needs of our clients. By the way, as you know, India is now a lower middle income country. And while this year may not be the best time to say it, the fact is that the future is bright. You know, if our per capita income today is X, it is bound to go up to 2x and 3x in 5 or 10 years, whenever. And the more it does, the more will be the demand for diversified financial services, more than proportionately. So if per capita income goes up 3 times, the demand for financial services, diversified financial services, go up 4 times. And therefore, we need to remain focused on what we are doing and do it efficiently and do it responsibly, and also at the same time ensure that we are sustainable and we have risk mitigation strategies against all these systemic shocks that we keep getting from somebody or the other in India.
Uh, Vijay, I think Malcolm Harper always used to say that microfinance, whether the SHG form or the MFI form, is an intermediary stage, and ultimately, every individual, however small she is, should be able to bank directly with the mainstream financial sector.
Yeah.
And that's also happening. If you see you mentioned about 2 lakh crores, half of that is now given by the banks
SFBs
and
and
SFBs.
yeah, and Bandhan, yes.
So when this is happening, so should institutions still try to be alive and kicking to survive, or they should see the writing on the wall and say that everyone wants to have with services with the mainstream financial sector?
So I think they should be alive and kicking and transform. They should not use their energy to remain what they are and somehow continue to remain on balance sheet credit intermediaries. I think that model is seriously out of date. To begin with, it's not an efficient use of capital, because first a bank provides almost 12-13% capital to lend to an NBFC. Then the NBFC provides another 15 to 17% on its balance sheet. So for every 100 rupees that is going to poor people, 30% is being offered as risk capital when their intrinsic risk is only 1.5%. So it's, if you look at it as a systemic thing, microfinance is a dinosaur as an idea. Now I say this with deep respect and in a sense, a lot of appreciation for whatever is being done. But conceptually speaking, we need to retool ourselves and become non-balance sheet intermediaries. Basically be into distribution. Let's learn from Ant Financial.
Vijay, connected with this was issue of the self-help groups, especially the women self-help groups. I recall when in a national level conference which NABARD had organized nearly 15 years back, I think, when
Yeah.
there was a lot of discussion on the sustainability of the SHGs. Then I said, actually, if you are really interested in financial inclusion, we should not talk of sustainability of SHGs, because I said that just as Marx has said that the highest stage of communism is a state withers away, the highest state of financial inclusion is the SHG has to wither away and the woman has to directly deal with the bank. Then the opposite view, like Sudha Kotari and others were saying that even if that happens, the group is required by the women for their community related bonding and empowerment and all. So, what do you say for this?
Yeah. So to quote Marx back on you, the state may wither away, but the solidarity and workers' consciousness should be widespread. About unity and equality and all of that. So, in a sense, I think, see, the self help group is unique in the sense it's not just a financial intermediation device. In the first place, it's a social solidarity platform in the neighborhood, most accessible to women. And that value of it is actually primary. The financial intermediary is secondary. So I agree with you that sooner or later the financial intermediation role should wither away, or they can just become facilitators, as has happened in case of in Andhra Pradesh and Telangana. Sri Nadi is now able to directly lend to individual members using an IT platform, but the SHGs and the VOs still have a role in little bit in appraisal, but also greater solidarity and so on. So I think both you and Sudha were right, uh, uh, but you were both right because the self-help groups play dual purposes, and those purposes are both very important.
Uh, Quite a interesting conversation. So, last but not the least important question is: have you, after having seen the entire developmental scenario for the more than 4 decades, what is your advice for young professionals who want to enter the this field of development finance?
Hmm. Well, I think you know uh, they really need to immerse themselves, uh, not in the back end but the front end. The problem is that while there's a lot of deep thinking and so on among the young professionals of today, but a lot of them are always working at the back end. They almost take pride in the fact that they've never met their customers in person. And to me, that is, in the long run, going to be problematic. Uh, they need to immerse themselves in the customer situation. Uh, you know, in a sense, the financial diaries idea, if you remember, that should be etched in their head. The kind of work that Stuart Rutherford had done, in Dhaka, or the kind of work that Ella Bain did in Ahmedabad, the kind of work that Fazle Abed and Professor Yunus did in Bangladesh. That's the kind of work, cutting edge work that is necessary to build. It's not a question of building software. Anybody can write a software application and somebody will improve on it, but you have to understand your customers and users and build from there upwards. The second thing is that I think we have to also understand the regulatory and competitive environment, because we are not the only ones who are doing this. And the view that regulation is necessarily only problematic needs to be revisited. Regulation is actually necessary for ensuring free play. It's like saying, we'll have a great football match, but there should be no rules and no referees. It's not. So, we need to have a sort of a different attitude towards regulation also. So, people who are what is called born digital, the native digital types, they, I think, are at serious disadvantage, according to me, if they do not immerse themselves into real interactions with customers, not deal with big data.
Thank you, Vijay. It was quite a wide-ranging input of your
Thank you. Your
views.
questions were wonderful and
Yeah,
gave me a chance
and it
to
was,
talk about many things.
yeah.
Thank you so much, Satish.
Thank